Hey everybody, Ryan Carson here. I wanted to talk to you about businesses to be purchased or sold. And so there's two different ways that could be done. If the business is an incorporated business. So if the business is not incorporated, if you're buying a partnership or you're buying a sole proprietorship, you really only have the opportunity to do an asset purchase or sale. However, if you are an incorporated business and you want to sell the business as a corporation, you could do that by two things. You could sell the assets of the corporation, not unlike the example of the sole proprietor and partnerships, or you could actually sell the shares of your corporation. So why would you do one versus the other? Most of the time, most buyers prefer asset purchases. The reason they do, the primary reason would be they're trying to limit and carve out of the business only the assets of value or deemed value and avoid the mistaken or accidental acquisition of liability. So what I mean by that is if I was buying from you and I wanted to do an asset purchase and I wanted a very definitive list of 100 items, inventory, equipment, goodwill, client list, all within this list of 100 assets, my agreement would be very detailed to say these are the 100 items I'm buying. Anything else I'm not buying, any other assets I'm not buying, and most importantly, I'm not attracting any liability of the business if the liability is not affixed in any way to those assets I'm buying. On the flip side, sellers of corporations can take advantage of what is called a share sale, and sellers prefer a share sale if they can qualify for what is called Lifetime Capital Gains Exemptions. Lifetime Capital Gains Exemptions, that's a tax term that, as a lawyer, I'm not going to explain tax to you, but your accountant could in greater detail. But if you've done your corporate and tax planning properly and efficiently, and you haven't used any of your Lifetime Capital Gains Exemption, you can essentially sell your business shares. You could qualify to utilize your Lifetime Capital Gains Exemption. Right now, that Lifetime Capital Gains Exemption, which is essentially a tax credit on the value of the business sold, the Lifetime Capital Gains Exemption is now at 1.25, so $1,250,000.